a privilege to introduce our next speaker, the last speaker in the tracks today to you, Joleen Young from KPMG. And if I look at the resume, I realize I'm immediately in trouble because with one of our earlier speakers, also a lady, I had to talk about her experience, and that gave her age away. So I'll just say Joleen has about 3 decades of experience, but that's not how old she is. She's much younger than that. She's currently with KPMG, and she's the lead of the payments practice. She's actually putting the payments practice together, I think, to do a lot of work or to build on a lot of work that she's already done, mostly in Africa, Joleen, both on the regulatory side of things, but also in terms of payment systems and technology and how these things can be harmonized together to really provide good solutions to both the regulator and also the end users of such a payment system. I think in that capacity, she's consulted widely to central banks in Africa, payment associations. I think many of the SOs and TPPs also knock on your door from time to time. I think she's absolutely well positioned to cover the topic for us, and her topic is basically building of Africa success, the payment story, what is happening in Africa. It's such a diverse space, such a unique market, also across the various geographies, I think very different. But what can we learn from that? And Joleen, with that, welcome, and we are really looking forward to your input.
Thanks so much, Marius. It was on a day just like this where I was sucked into the national payment system in South Africa. After the merger between Boland Bank and NBS, I drove to the office, went into the Treasury Department, and my boss said, "What are you doing here?" Naturally, I thought, okay. I said to him, "I've come to work." So he says, no. The SARB is holding a national payment system, well, he didn't say that, he said NPS workshop at the Reserve Bank in Cape Town, and you have to be there. I'm thinking, So Mike Huber, Dave Mitchell, the whole lot of them were there, and they were telling us about the national payment system. I looked at this as a ex-money market derivatives trader, funder for Boland. I thought, I don't have a clue what an EFT is. So I sign a paper and they do stuff, but that's about as far as I understand. So with this mandate now dumped on my shoulders, I went back to a guy called Jerome Marais. So all the old guys in the system will remember Jerome Marais. And I said to him, please tell me what an EFT is, and specifically why everybody's jumping up and down about this mandate thing that they talk about. That was the beginning. But since then, I was part of the team that did the payment system regulations and so on in South Africa. And in 2007, I came to the realization that there are no new conversations in South Africa because we'd pretty much gotten through everything. We've done CLS, we've done the directives. So I went into Africa. And just as we're looking into that, let me give you some mega trends from an Africa perspective. 30 to 90% of the world's gold and platinum and copper is in Africa. 10% of the world's oil reserves, 60% of the world's arable land is in Africa, unutilized. 1 billion people, 60% of which are going to be under the age of 30. So that's a really, really big demographic from a working age perspective. It's the biggest opportunity from an infrastructure perspective. The challenge from an Africa perspective is not that people don't know or that they don't understand. The innovations come, but where do the innovations actually have a challenge? They have a challenge with a base infrastructure, electricity, cost of telecommunications, data, and the like. So it's not about the payment system as such, but more about how that payment system has to cooperate with the broader vision. So why is Africa seen as the next big thing? 1.8 trillion collective GDP, roughly the same size as Australia, a little bit less than Brazil. 860 billion, the value of consumer spending, 60% of the global arable land, 52 is the number of African cities with more than 1 million people living in them. 70% sub-Saharan Africa's population is under 30%. We've heard Bill Gates this week speaking about the population, and this is more about where we see the next growth. So Africa is definitely the next big thing. So we're looking at the future. Estimated GDP by 2020 is 2.6 trillion. 1 trillion estimated the value of consumer spending, 1.1 billion the working age, 128 million the African households with discretionary income, and 52% the number of Africans living in cities. So no longer will the rural areas have the dominance of people. But I don't know how many people have been to Nigeria. It is a hectic place to go. There are 174 million people in Nigeria, and in Lagos, I think the population of South Africa would fit into Lagos. So there's a lot of people and a lot of opportunity. But again, it's the base infrastructure that lets them down. It's the electricity supply, it's the telecommunications, and it's the cost of every household actually providing that for themselves. My famous highway, I look at the national payment system as a highway, and if you look at some of the points here, it's the national road system. It's an asset, it's efficient, neutral, scalable, always available, safe to use, connects us to the world, it's safe and reliable. So if we look at Pick n Pay's, Richard's chat from Pick n Pay, he spoke about 98%, but it's that 2% that costs him money. And that's where we need to get to from a payment system perspective. But it means that the base infrastructure needs to develop at the same rate. On the first megatrend, you'd see that 92 billion was what we should be spending, and we're only at 42 billion from an infrastructure development and maintenance perspective. So looking at that, I thought, let's have a look at how the countries are stacking up. They subscribe to the BI score principles. The African country central banks have adopted the payments and financial markets infrastructure principles and are going through the self-assessment, and they have payment system acts and directives. Most have e-money regulations specifically covering mobile payments. They have functioning RTGS, most are SWIFT-based. They have ACH and EFT clearing for checks. Some have interoperable switches for ATM. Not all of them have that interoperability, but working towards how that interoperability plays out. So they check imaging. It's classified as truncation, but it's basically an image to settle, and then it's about how that actually gets to the clearing piece. Only a few have payment system management bodies. It's a very interesting concept. So I've had a number of discussions in about 18 countries across the continent with central banks. And I've asked, so where would you see this payment system management body? So where would you see that fitting in? A lot of them have said, if we're going to do that, we're going to need to create that whole infrastructure around it. And where we're at, it doesn't seem feasible. So we have the collaborative view of having banks work with us through payment committees. And that has seemed to be working. Only a few, as I say, have gone into the payment system management body. So taking it to the next level, what does the next view look like for Africa? We've heard all the exciting stories. The PSD2 reminds me of where I got involved in the international community around understanding where are we going to direct the SADC project to around standards, around what are the international best practices, and I dare say, there may be some technology providers here, my view was no vendor-led solutions. Because across the continent, what we've seen that has had a negative impact on the way in which payment systems go forward is a vendor would go in, sell the central bank a Rolls-Royce, but the road was yet to be built for the Mini or the Willys Jeep. So those are the things, and one of the primary things that I've always maintained is, yes, the fintech has a place, yes, the system operators have a place, but if a vendor leads a solution in a country where you don't consider the total environment, you will end up having problems, and that's where some of these systems actually fail. So if we look, what are central banks focusing on? Cash reduction, promoting of electronic payments, and agent bank regulation. Nigeria was the first one to come out with the bold statement of cashless Lagos. Now, cashless Lagos said we need to deploy point-of-sale devices and make sure that every bank puts in about 76,000 point-of-sale devices over a 3-year period, and we've got payment terminal providers that will go and deploy these point-of-sales. Didn't work. And it didn't work not because the infrastructure wasn't there, it didn't work because the retailers were not yet willing to give up the change in my pocket. Because every time there was change to be given when a customer came to the store using cash, they would say, oh, I don't have sufficient small money. And the customer would say, no, don't worry, it's fine. You know, it was minimal. So to change from pocketing the change into accepting these cards on a wide scale and understanding that the point-of-sale device is going to give them a lot of benefit because they wouldn't have to hold so much cash and they wouldn't have to have the cash deposit fees because the central bank also penalized excessive cash deposits as part of this cashless Lagos. That has now since been repealed because the retailers have come and said, well, the infrastructure is still not there to support it. So what the central bank implemented was reverse interchange. So for me, I will keep my view to myself, but it was akin to rewarding bad behavior. It's like giving a child a sweet if they have not behaved well. But it seems to be picking up because some of those merchants are now accepting these card payments and the point of sale usage is now slowly ticking upward. Step in the right direction. Creating an enabling end-to-end regulatory framework for payments, requirements for MNOs to put cash at the central bank, and real financial inclusion in line with the World Bank policy. So we listened to Ingrid Goodspeed, and she spoke about this World Bank policy. But creating that end-to-end regulatory environment. Again, I will use our big economy on the continent, our brothers up there. Nigeria have prided themselves into creating that framework. That framework says that MNOs, you are there to provide the infrastructure and you make sure that the messages can go through. Companies, you are able to create the platform that can interconnect mobile payment systems, and banks, you stand and you take accountability as a bank-led solution from a Nigeria perspective, then you can have these systems. The requirement for mobile money operators to put cash down, last year the Bank of Ghana issued a regulation for e-money issuers, and with the e-money issuers, banks, mobile money operators are required to do a few things. One is compliance with ISO 27001. PCI DSS, I didn't understand that because essentially a mobile money doesn't have the card transaction, but we'll leave that one there. And also to put 5 million Ghanaian cedi at the central bank to secure these payments. They would then be issued with a mobile money issuer's license, giving them that freedom to hold those balances. So this is a step in the right direction where central banks are saying, we cannot get rid of you, but we cannot have a risk in the system, so we would need these mobile money operators to have those accounts with us and put those monies in. And they were given a 6-month period to do that. And through that from Ghana, some of the West African countries also followed suit and have put the same regulation in place where mobile money operators are required to hold physical cash at the central bank to secure those mobile money wallets. ISO standards for non-banks, licensing of fintechs, reverse interchange we've spoken about. Nigeria also did another interesting thing. We heard from a SEPA perspective that the IBAN was going to be what is being implemented across, and I'm certain that every bank in this room and the operators here understand that some banks have 10-digit account numbers, some have 11, Standard Bank has 13, and when you're receiving as a bank or an operator those accounts, you actually have to add digits or take away digits in order to get the thing to process through. What Nigeria did in 2008, 2009, is implemented what they called the Nigeria Unified Bank Account Number. Close to IBAN, not totally the same, but also what it did was it created a standardized account numbering system which made it easier for anybody transacting and interacting with those account numbers. So as Africa is a growing field for fintechs, we thought from a KPMG perspective we would put some numbers around what the opportunity from a fintech perspective looks like. 80% of Africans have access to formal financial services, and 500 million have smartphones. It's a lot of smartphones. Mobile wallets, 183 million people have a mobile wallet, 3 times more than the US. The competition, there is about 1 billion people to be reached. There's enough people to make a business case for payments, for financial inclusion, and for fintech disruptors to actually take this market by storm. The funding raised, 30% of all funding raised, whether private equity or whether other funding, that was all for fintech companies. So that investment is now going to be seen. We heard Craig Bond this morning talking about what Barclays Africa is doing around the incubators, and this is where we're seeing a lot of these fintech coming in. I love this picture. This was, I attended the US payments conference from a KPMG perspective, and at that time, all of the industry players in the US were trying to figure out what they needed to do for real-time payments. And KPMG ran a You Collaborate event. It's a methodology that we follow. The only way that I can really describe it is speed dating. There are a number of different pockets that go through, and they have working groups across whatever these environments are, and the industry drives the conversation to say, what is it that we're looking for? And if you look here, Santander, the head of Bradley Lima from Santander's head of innovation said, there's a perfect storm evolving. Technology increases customer expectation and rapidly changing only the banking industry, but every industry. So fintech development is not going to affect banks only. It's going to affect absolutely every industry, whether it's a medical industry. So there are a number of medical schemes that are looking at how do you have an app for individuals to check what is their hospital balance, what is their medical what is their medical savings on a daily basis look like. So it's every single industry. We've seen in Kenya, Tanzania, where the Bill and Melinda Gates Foundation are sponsoring apps, together with the MasterCard Foundation, are sponsoring payment apps in order to have insurance for crops, insurance for homes. So those industries are all going to be developing off the back of the fintech revolution. And if you look at the bottom over here, so from a bank perspective, how are we going to get this cost of cash down, get this into a digital wallet, and use our big data, which is actually small data, effectively in order to get the traction that we need? Some of the movers and shakers. They're not all of them. They're only some of the key ones that we have come across. And it's not in all of the countries. If you look at, sorry, I'm not going so quick. Paga, they created the platform for interoperability between mobile network operators and banks. So the banks were leading that, but Paga created an opportunity that allowed any customer of any one of those wallets to interact with one another. Jambo Pay is online payments. Airtel, mobile money, what Airtel have done is in Tanzania, Airtel Tanzania have an interoperable system with Airtel in Rwanda. That means that people could transfer in the East African community. So the East African community consists of Kenya, Tanzania, Uganda, Burundi, and Rwanda. And within that community, where there is an agreement cross-border to do payments, they created that interoperable system where one of the few cross-border mobile-to-mobile solutions have actually been implemented. M-Cash in Mozambique, Airtel, Vodafone, and MTN have been given licenses in Ghana, and Nigeria have integrated a lot of their front-end systems for payments, whether it is online, whether it's point of sale, whether it's mobile. So those systems have been integrated. If we have a look on this side, we look at the Y Group. In South Africa, I'm certain most of the people in the room have heard of Y Group. They've got about 70,000 merchants signed up to accept a mobile short code for payments. And that's going to be the next thing in terms of how do you get that ecosystem to go from where it is swiping my card to paying with a mobile short code. TerraPay, they're creating interoperability for cross-border mobile-to-mobile payments using the mobile account number. TerraPay are part of the Mahindra Comviva group under Tech Mahindra, and what they're doing is creating a low-cost interoperable system by signing up partners who want to have sending, whether you're a mobile money operator, a bank, or a retailer, and partners on the other end to receive. The key is something as little as $50 can be sent through this mechanism where it's going to be cost efficient for the person who's actually doing the transfer. And that, to me, is going to be, they're looking to expand into Africa, into 23 countries, and have successfully worked with the central bank in Congo, Brazzaville, and DRC to create a cross-border interoperable transfer system in order to have those mobile-to-mobile payments, whether you're in the country or in the other country. So those are the kinds of things that we're seeing happening. The PayU, SID, EFT Online, those are South Africans, Cash Envoy, PayAttitude, PayCorp, QuickTeller, InterSwitch, UBA Payment Gateway. A lot of those developments have come from the big markets. It may not be a market for credit cards, the African market. There are so far fewer credit cards across the continent than there are debit cards, but a lot of those transactions are happening online. So numbers of customers are doing online payments from a card perspective. Enabling regulatory framework. Why is it important to have? Well, if you look here, it's opportunity to learn from other markets, leverage the growth in fintech, but in all of it to serve the needs of all participants in the country. And that's the consistent message that we've seen come through this week. It's you need to have a more inclusive framework, and you need to serve all the participants in the country. So if we have a look at the impact of something going wrong, heaven forbid. Integral and function of an NPS is not compromised in any way to disrupt the operation or the sustainability of the payment system, as it would create large-scale economic disorder. Any of the systems that have gone down have had that impact. There was a day, I can say it because I'm up here now, where the switch, the bank served card switch went down, which impacted a number of people, but not only in South Africa, across the border as well in our CMA region. So large-scale disruption isn't only linked to what you do in your own country. If you have systems going across countries, it's important that those systems take account of what that impact and potential disruption is in the areas and in the jurisdictions where those systems are deployed. So what should FIs focus on? Financial industry is clearly the largest ecosystem that has not been disrupted, and getting closer to the startup world is one of the smartest things that FIs can do. So financial institutions are already starting. We heard with Craig Bond this morning with the incubators that they're sponsoring. A number of banks, Standard Bank yesterday about blockchain, a number of banks are realizing that we have to get skin in the game in order to ensure that the system goes forward on an orderly basis and ensure that the risk to the system is minimized. Stepping out of that into the financial inclusion challenges across the continent, including people in the economy, including people in the transactions, is going to be important. We heard this morning Ingrid Goodspeed speaking about transact, pay, save, insurance. Those are some of the pillars that the World Bank has put through in their financial inclusion policy that they published. But looking at the cobbling together the puzzle pieces, if I may use that analogy, awareness, adoption, building of the tailoring existing platforms, identification of risk management, use of accounts once it's open, high regulatory burden. Banks are faced with a sustainable business model. They've got a huge infrastructure that they need to deploy. They've got to maintain it, ensure that it gets to the level of economic viability that it should have, and those are the things that they need to do. On the other end, you're looking at the changing regulatory environment. Reporting is becoming very important, not only for the domestic transactions, but also for cross-border. Increased risks. We heard a lot about cybersecurity. We've heard about the hackathons and so on, and the blockchain that is now going to help us not to have too many of these breaches along the way. Innovation in global growth. The new players changing the game quickly and efficiently, and at low cost. That's going to be the biggest challenge, the cost of the transaction, and it's about how to smartly organize yourself around that. Customer expectation, the app of it all. Every single person that I encounter, whether it's here or whether it's up in the continent, everybody looks at, is there an app for that? Whenever you speak about anything, the question is there an app for that? So the app of things and the Internet of Things are going to change the way in which people fundamentally run their lives. That redefined ecosystem, to me, that's where we're going to go. So the result is bridging the great divide. An opportunity for central banks to enhance the payments landscape by creating enabling regulatory frameworks, the platform for oversight. The oversight and monitoring of fintechs is going to be the next best challenge, because banks, you have a big stick. You have a Banks Act, you are subject to the NPS Act, and you've got all these directives. But with the fintechs, the central bank is not their primary regulator. So it's how does the central bank, as the secondary regulator, in charge of making sure that the payment system is safe, efficient, effective, and has legal certainty from a settlement perspective, how does the central bank then extend it? There are a number of mechanisms, and I am waiting with anticipation to see what PASA is going to do from a South African perspective in order to include those institutions as members, fully fledged members of PASA, to take the payment system forward into the next decades. In closing, as payment practitioners, regulators, technology, system providers, we have the unique opportunity to build the next generation payment systems, instruments, channels to achieve real financial inclusion and grow our collective economies across the continent. Whether we like it or not, from a South African perspective, we are still in the continent. The Limpopo did not grow wider. There was not a tectonic plate shift. And across this, we as the Africans need to seize the opportunity first. Most of the companies that from a KPMG that we're working with from a market entry perspective are all countries from Europe or India. Nothing from Africa. So I encourage every person here to take that and our KPMG Africa slogan, to succeed in Africa, you need to be built for Africa. Thank you. Questions?
Thank you, Joleen. If I may start.
Sure.
So I think you are also in a position where you often see many of these fintechs and what they're busy with, and you realize they sit with an important piece or building block of a potential future solution. My question is, can we do more? Now, with your analogy of that bridge between those two things, that previous slide of you, can we do more to connect the parts and all the players with what they have? What is your view on that?
Listen, create a safe environment where they are confident to share ideas, understand where they're coming from and what they've actually heard on the street. Because a lot of the time, the bank doesn't function on where the people are actually at. There are a lot of migrant workers, and if we look at our economy from that perspective, there's a lot of opportunity to say, how are we going to make it simpler? And this comes back to the regulators as well. They're going to need to step into the ring. They can't stand on the outside. They're going to step into the ring. How can we make it simpler for you to interact with your family at home and to send life-supporting aid to them, whether it's cash, whether it's goods? Those are the things that we need to do. And we need to do it at a much lower cost. Because if you're a migrant and you are working off a marginal base, the costs cannot be prohibitive. They need to support the way in which these migrants are able to support their families back home.
Thank you. Let's open it up for questions.
Thanks, Joleen. Just from your experience, which of the central banks up in Africa, and let's just leave our own local one out so we don't shoot ourselves in the foot, but which ones have been proactive in terms of the fintech environment and sort of being proactive on it?
So I like my feet, so I'm not going to shoot myself in any one of my feet. A number of the countries that I have visited, if I have a look at Botswana, even Namibia, which is close, one of our neighbors, Uganda, Tanzania, Kenya, Nigeria, the whole Francophone West African region, the central banks have actually stepped into the ring and listened. The recent issuing of the mobile money issuer's license, that is where the Bank of Ghana has said, we know that banks have a part to play, but we cannot ignore what these financial technology companies can do for us. And more we will see regulation coming out from these countries. Rwanda, for instance, it's not very well known in the region, but they're doing a lot in terms of, we're going to open this market and we're going to make sure that we can provide you with a transacting capability. Whether you're a fintech, we've got our base regulations in place. We subscribe to all the Bank of International Settlements core principles, and we're going to give you an environment where you can service the economy, the real economy of the country.
Any further questions? We've still got some time left.
I just want to ask, should the banks see mobile network operators as threats, or should they rather think about working together?
Absolutely working together. The mobile network operators stepped into it. If we look at Kenya, we heard in the earlier session that M-Pesa was the most successful mobile money wallet. It didn't come without its challenges. It put stress on the banks who held the trust accounts. It also had a number of fraud incidents along the way. Banks, and if I may just take back to the Central Bank of Nigeria, what Central Bank of Nigeria have done is said, we recognize that mobile network operators play the most critical part to our payment system, and we need to encourage and enable them to do that. So banks, may I recommend that you go and engage with them, because they are your lifeblood to your client. Without them, you cannot reach your client. And building on top of that, the likes of Pugger, they have created an environment where those mobile network operators can freely communicate on the bank's wallets to the customers that are going. And they see it as a great thing, because the more people that use these solutions, the stickier the customers are. So I have less churn of that SIM card. If we look at go to any major dump site in South Africa, how many SIM cards do you actually find in the dump? Because all I'm going to do is I'm going to get the SIM card, I'm going to use the airtime that's free on this thing, and I'm going to dump it. So it's about creating that stickiness. And I believe that banks should see them as a part of their integral toolbox in order to create their payment solutions that they have.
Thanks, Joleen. Any further questions? Perhaps I've got a further question. So you sat in with the previous speaker, Steve, when he spoke about, what happens in SEPA, and, there's almost an active leveling of the playing fields. What is the trend that you're picking up from African central banks? Will they go as far?
It's early days. So I've had a lot of interaction with SEPA. When we were looking at the SADC regional payment system, having been involved with the central bank payment leaders from 2003, we got it to the place where the Banking Association was now established and was to write those rules. So the first thing I did was I went to the only market that I knew, got on the aeroplane, and I went to Europe in London, and I started speaking to people that I knew in the market. And I found that from the SADC perspective, the only thing that I have to say that from a SADC perspective we didn't pursue, well, I'm hoping that it will play out the way it plays out, is the single currency. But everything else was very similar to what SEPA was doing. I was privileged enough, a very good friend of mine wrote a book, and I provided the African extract for SEPA, PSD, and other milestones along the way. Ruth van der Hoffer wrote the book, and in the back of the book, you'll find the Africa story. And the African story said that we've got SADC, and we've got this single RTGS that's been created. We've got East Africa that had a complex multi-currency settlement system, which I think is now in its stage of revamping. We've got the West African Monetary Zone, which never really took off. But in the Francophone West African countries, you've got a whole region who have a single central bank, a single regulatory system. So a lot of the lessons that have come out of SEPA, PSD, the Eurozone, Target 1, which I think is akin to where the East African community is, Target 2, which is where SADC is looking at. But it needs to fulfill the requirement of the market that it's servicing. And I think SADC, the SARE system, in fact, has had a huge success. And that is because of the people on the ground in South Africa and in the other SADC countries that have made it a reality, learning from international examples.
So you actually say it's going to come. It's a matter of
it's a matter of when.
Yeah.
Yes.
Ladies and gentlemen, Joleen Young.